Vladislav Mironovs, Chief Digital Officer of Commercial Bank of Dubai. Vlad, very warm welcome. Vlad is new to the region, but he has spent almost a decade plus at GE and multiple markets in US and Eastern Europe to build his very interesting portfolio of products and service launches. He's also an NCAD trained digital thinker. So very, very warm welcome. Moving to my next speaker and panelist is Vinod Yadav. Vinod is Group CIO at Emirates Investment Bank. So Vinod has multiple successes to his credentials. One of the key ones is he has built one of the first pure play digital banks in Indonesia called Bank Uno. And he has been a very long time transaction bankers and helping banks turn digital. So Vinod, very, very warm welcome to you. My next panelist is Hari Padmanabhan. He is a name known in the industry, a serial entrepreneur, and has taught many of us what digital and technology can do for you. Hari is chairman at NCIA, which is continuing to innovate on technology. So I'll start the panel. So this panel is quite interesting because all of us know B2C industry is easier. Consumer wants change, digital, it's delivered. Corporate and SMEs don't express the change as easily as retail banks or retail customers do. So we'll start, Nitin, with you in looking at SME and corporates. How is the client expectation from banking and especially transaction banking changing? And what does it mean for bank from a transformation perspective?
Thanks, Chetan, for giving the overview in terms of banking in the region, and a good panel to talk about a lot of things I was planning to speak about, like speed, Mr. Rashid talked about. But let me just give some perspective from the transaction banking perspective. What I'm seeing over the years, there is a dilution in terms of segregation between SME and large corporates. Everyone now is aspiring to have the right service as well, at the right price. So first thing that comes to mind is ease of banking. Banking has to become really easy, like we have in retail today. We talked about all the digital banks. It's on a click of a button. I think that's where the trend will go in the transaction banking as well. For banks, we have to probably be ready for more of a marketplace concept to be able to provide multiple services, a one-stop operation, rather than allowing the customer to do, banking or banking financial services across multiple banks. And that's the aspiration, in my view, banks should aspire for. And that's what the customers expect today as well. So with that comes obviously the challenges, but that for me would be one of the big things when we talk about open banking, open finance coming, and the collaboration will become even more and more relevant. That's point number one. Number two, I was thinking of speed as well when we are talking about it, but I do feel along with speed, there is a lot of service element that has to come in play as well. When we look at banking from retail all the way to corporate, and we talked about digital versus brick and mortar. Still, there is a blend that will come from the transaction banking side. There is a lot of customization or needs by the large banks to get more customized service or products as well. So we can't just have a digital offering, we need to probably customize that offering. Now we can talk about AI assisted customization. Definitely that's in the future. It's building, it's not there yet, but we still need good corporate bankers, coverage bankers to be able to assist in that banking as well. But that's a journey I believe is started, and there are examples of digital banks getting into now transaction banking and actually now doing very well as well. So that's a good uptake as well. Third thing, we did talk about personalization. So I'll give a different angle on personalization. I think the customers are becoming more price sensitive as well. And the competition is there. So while we hyper personalize, we also need to customize the offering to our clients for their size, for their need. And it will probably become more like a price based on value-added services. Right? So we talk about basic services, generic, easy, low cost, no cost. But as you value add, right, you have to probably look at how we offer the service as long as the customer is willing to pay for it. So those are the three, if I coin it ESP, ease, speed/service, and personalization and pricing as well. Now, what does it mean for the bank? See, we talked a lot about AI, and actually we can't conclude any conversation without mentioning AI. But I do feel banks are still working on not data quality or data management as well. It's still a journey. I haven't seen any bank in this region or anywhere where they say they've got it all. So it's still a journey. We as a bank also are in the journey. So that data quality becomes a bedrock for providing AI. Otherwise, we have wrong decisions, wrong offerings and all as well. Very relevant topic you did cover on the open banking, open finance. That becomes the new age, or direction for the banks. So collaboration will become key. We have to be ready for end-to-end integration. Large corporates with their enterprise systems, for small corporates or SMEs, offering portals for the clients to seamlessly integrate with the banks. So that for us becomes a very, for banks, we have to be ready for that as well. So essentially, we're keeping the client in mind. Today we talk about different silos, risk, credit and all. We need to keep the client in mind while we design any service or any product as well. So that's, in my view, is the new age. We look at holistically, right, how the risk, credit, products, operations come together and think from the client perspective and deliver.
So quite interesting, holistic perspective in corporate and SME both segments. Vinod, I'll move to you next. You've been working on both sides as a banker, as a solution architect. So when you look at the corporate different segments, how do you develop a solution, differentiating across segments? And again, your own view on, do you see future on corporate or SME to be an RM-driven future or a virtual RM-driven future or a physical RM-driven future?
All right, so thank you so much, Chetan, for asking quite a relevant question in today's time. And good morning, everyone. And I'll touch upon, and I'll probably break this into 2 or 3 areas that you touched upon. Before we look at a solution, I think my view is to look at more from, as you rightly said, is a segment need. And I think Nitin was alluding towards how it's been more specialized. I mean, you don't have a one-size-fit-all kind of a capability. So we need to look at where the market is moving, right? And then look at solution. And some of the considerations that we need to keep in mind while we put up a solution out there. So one is to look at the market, which is, again, wholesale banking, which is the large transaction banking businesses. And large banks in the country are on quite a mature state in terms of capabilities, right? There's hardly much of a difference left in terms of differentiation. Again, that's driven a lot by relationships, pricing to that extent in terms of relationship with the bankers. So that segment is very well catered to, and there's a lot of innovation that has gone in over the past, I would say, a decade. And there are more enhanced services which are offered by banks, like payments on behalf of corporates, collections on behalf of corporates, and these areas they have innovated. So I think in that space, I believe the banks has to look at how can they bring in efficiency in that space, leveraging the technology which is evolving, use of AI, and being able to guide the customers proactively in terms of their liquidity needs. How can they get kind of a better pricing on the balances that they're carrying, be it notional or through actual movement of funds across different liquidity needs. So that's the side of, I would say, the wholesale banking. The other side, which is getting a lot of attention in the recent year, which was kind of a bit neglected, was the SME. And that disruption is massive disruption that's going on right now. And the banks who can actually catch on to that would be the ones who can get onto that momentum and cash that for mid to long term. One of the things that is evolving for a lot of SMEs is the bank's outlook towards the platform economy. How can we make the embedded finance work for our customers? So people think embedded finance a lot from a B2C perspective, but a huge amount of disruptions happening when it comes to a B2B sort of embedded finance. So there are platform economy. If you look at, there is a lot of movement happening on the Amazons of the world, or in India, for example, Flipkart, getting banking licenses and moving in this space of supply chain finance and fulfilling the needs of SMEs. So that space is really hot at the moment. And probably we are not facing that kind of a heat over here in UAE, but very soon you will see that momentum happening, and the banks who are moving faster are the ones who will be able to reap a benefit out of it. Now, having said that, I will come to the last part, probably from a solution standpoint. What kind of a solution should we look at, right? Primarily on the SME side, if you look at, the bank's ability to have, again, a very secure way of opening up. Having bank do not exist within, the branches and the physical setup that they have. The branch extends and beyond their setup and sits in all these platforms. It becomes almost seamless for any SME to access the banking product. So which means we need to have a highly efficient and secure mechanism of opening up through API and open banking coming into play. We should also have a very sophisticated risk management. We should be able to detect anomalies if there is an instant access of credit. At the same time, we should have alerted mechanisms to detect any kind of risk on the portfolio. So again, a very, very agile and in that sense, a solution which can cater to expanding, opening up, and having seamless transactions that can be executed at the platform rather than on a banking website or a bank officer, right? So that's what my visualization of solutions. And lastly is that whether it'll be RM-led or whether it'll be hybrid or totally digital, right? So again, it's something going back to the previous panel that banking again will be human driven, and humans should get efficiency. So what an RM can do or a relationship banker can do today, I think that should get 10x or 20x with better efficiency. They should be interacting and talking to the customers rather than doing back office work, and that should be something coming to them. So it's a hybrid, but yes, human interface is very, very important. Yep.
So quite an interesting insight on differentiating. Thanks, Vinod. From differentiating the segments, designing embedded finance and unique solutions, and make your human RM intelligent rather than putting a bot or a virtual. So that's again something coming from experience. Thank you so much. My next question, I'll go to Sajeev. Sajeev, you've built a real-life, large transaction banking platform, and Mashreq was one who started the industry way back in 2000, right? So there's no better person than you to tell us what is a future-ready transaction banking and how does a bank build it?
Thank you, Jatin. Good question. And first of all, thank you for all the fellow panelists. Great insights, and I was listening. I think by listening, I see that we are on the right path. Okay, it is like 5 years from now, if your transaction bank looks the same way as of now, then your bank is out of the business. That's the key thing. So when we built a platform for the transaction banking, we never looked at as a platform for today's need. Mashreq, as many of you know, is a very techno-savvy company. From chairman to CEO to business to technology, there is always a technology element. Okay, so I'm almost 19 years working in Mashreq, led different departments. From my experience, I have never seen even a single request from technology enhancements being rejected. Okay, so that is the power in which your leadership looking at technology and how you need to transform that area. We have seen a large, transformational journeys in the consumer banking. That was the phase everybody knows about it because that is the brand building. But when it comes to the corporate banking and the transaction banking, the customer demand itself is changing. Okay, they are experienced the consumer banking. They need the similar experience what they want. That is what it is changing. Okay, so we need to adopt. If you are not adopting, you are out of business. So 3 principles. I think a future-ready transaction banking, it should be intelligent, it should be embedded, it will be trustable. These are the 3 principles in which we need to build our systems. So when I say intelligent, along with the platform, you look at your data journeys. Okay? Your data, you need to invest the same kind of effort in building the data pipelines, data journeys on all your journeys what you're building for the customer. That gives us the edge because if you build a futuristic platform and if the data, if you cannot produce a meaningful data or a predictive data, that is like a futuristic car has without any fuel. Okay? So that is one of the key elements which we have taken. AI plays a major role. AI plays a major role. This is where, we wanted to differentiate with others. We talked about ROIs. Many of the times we talk about ROI, whether there is an ROI there or not for the today. Sometimes our investment decisions are not based on ROI of today. Okay? Something, if we can make a differentiation in the market, we will do that. That is where we infused AI, an agentic AI framework into our corporate banking space. Okay? So that is one thing which we have to say. It is intelligent tomorrow. The way in which the reconciliation happens or flagging various risk, various manual process, that is going to change. When it is embedded means we strongly believe that future of corporate banking is not going to reside on portal. That business is going to die. So your journey is going to be at the client side or at the customer, part of the customer, the journey. So your all banking services will be part of the client ecosystem in their ERP system or treasury system, wherever it is. So bank is going to be going into an invisible mode very soon. We have started an API banking thing. We have won many deals. We are seeing an increasing demand in people coming into play, including the regulators. We are working on the API banking part. And third is the trust. Trust is the fundamental for banking. Without trust, we cannot deal anything. So trust. Now, the stable coin as well as the tokenized assets is going to be the mainstream in the transaction banking. So that is the way it is going to change the way how we've seen transaction banking 5 years before and how it will be in the future. So it is not about giving you a better banking. There is nothing called giving you a better banking. It is about the banking which will disappear in customer experience itself. That's all about it.
So quite an interesting insight from practitioner's perspective on what one should look at in a future of transaction banking. I'll move to Vlad. Vlad, as a Chief Digital Officer, one of the challenges you are having is you're coming to a market which is not as matured as what you worked in your past avatars. And how do you envision the role of one, data, which Sajeev spoke about, and AI, which previous panel also spoke about, in reshaping the whole transaction banking services and over the next maybe 4 to 5 years?
Yeah, I think I would go a bit to the basics, because if we look on what's been happening in the market, so data and AI in a different variation was actually with us for many, many years. So we started with basic data analytics, so we always were looking how to help customers. But if I look on the transactional and corporate banking, fundamentally we were helping customers to solve a couple of problems. Number one, finally helping them understanding where is their money. Because customers want to have seamless transactions. They want this money to be moved quickly, and they want to know that this money will arrive to their partners or customers. So how we can be better today with this data and AI to help them to know that. Second big thing for a lot of customers is trying to understand, is my invoice paid? Or how I'm dealing with my trade deliveries. And then for this second thing, we clearly see data and AI coming even more than on the payment space, because if we put a proper open banking and open finance, we deliver account analytics, we suddenly can involve scoring. We can tell the customers that my counterparty is right and secure. We can also turn the shortage of the cash flow into the opportunity of giving additional funding to the customers. And if you look on the developed markets, then in the developed markets, since the open finance been adopted, primarily credit scoring moved into open finance space. It's enabled financial institutions to give very quick credit, specifically on invoice financing and giving opportunities to give instant credit lines. Third, I think, and a very important element which comes to any corporate or SME institution is really about the cash flow. Because at the end of the day, we all know that the real business banking is built on the ability to help customers generate the cash flow. In my GE times, we've been helping customers across the continents to enable, based on the data, generate more cash flow. We were coming to help with the proper financial solutions, but to do this analysis at that times, it would require to have a team of 20, 30 people to do the analytics, feed this data to RMs, empower them, and then go and pitch to the customers how they can be better off with the financial solutions. Today, data and AI, open finance, can enable us to do it fairly seamless. Number four thing for me is actually bringing the trust, on which I think almost everyone in the panel already spoke about, bringing the trust from the perspective of the security and awareness. So transaction which I did, it happened in a very secure way. So I know the beneficiary, this beneficiary was checked, and then we've seen that these checks were done in the different ways across the different geographies. Most recently, Europe and the SEPA implemented the beneficiary check, yes, on the one continent level. But if you try to put it a bit on the perspective of what this data and AI means, so practically, it will enable us to come to the stable coins. It will help us to come to the mBridge and GSER used in scale. And today, we have like 100+ countries exploring digital currencies. And these digital currencies actually would enable all of us to help solve these 4 problems. And I think these 4 problems, they remain more or less same across the times. But today, I believe we are much closer to help solve these problems for the customers than we ever been. And that's because of this transformation in data and AI.
Excellent, Vlad. Quite an interesting thought on how practically one can look at data and AI to transform. Moving to Hari. Hari, you've been listening to bankers since morning. You founded multiple firms, made them big, then allowed them to go away. How do you see banks partnering with fintechs can make a big difference to their transaction banking agendas?
Absolutely. Thank you, Chetan. I think you said, you're right. I mean, I'm listening to bankers and the fundamental shift I see there is that when we started in this business, you talked about teaching. So those days we were the technology gurus and we spoke and people listened. Today it's not that way. The bankers have gone through a process of implementing technologies at various phases of the technology evolution process, and the two have kind of played in tandem, banking and technology. So there's a lot to learn before you speak, and that's the endeavor that you engage in every day. Now, I think the question really is that fundamentally, whenever you look at anything that you want to do, you say a digital transformation project is a very bandied about conversation in the industry everywhere. The question is that the fundamental question is, where do you want to go with it? Can you today effectively define a goal for something you're starting today, the benefits of which you will start to see 1, 2, 3, 4 years from now, and the real business benefit in the market as it goes and makes an impact for you and delivers bottom line results is not today. It is time away. If you want to look at a bank across the board, you're not looking at one aspect. Typically you say, these are my priorities, let me handle retail first and then I'll come to SME afterwards. Like you said, corporate and SME comes right at the back of transformations because digital and mobile is much faster, easier, visible. In that context, what Rashid said in the previous panel is very, very gratifying to someone from our side. Enabling the fintech. So if you, we always go and say we enable you, but no, not anymore. Can the business enable us, enable the fintech to perform what we believe will deliver value while looking at it from the standpoint of where you are? Now, this is the first step that I would put in the entire equation. So the whole idea of evolving this final goal or the picture of where this needs to be in a few years from now is not anymore a finite, time-bound conversation. It's a perpetually shifting, changing, goalpost you're trying to hit all the time. And that is the key challenge. So, I was talking to the principal of a school for small kids, and I was asking, and he was saying, I'm creating a school that I believe will deliver education as it needs to be. And he spent a lot of time globally. He said, we don't teach in the school. I said, what? We want the students to learn how to learn. If you can learn if you can enable them to learn how to learn, they will learn all their lives. So I think in that sense, if we can create a technology platform, if we can adopt and create a technology platform that is built for constant change, right? And how that is the fundamental element. So and move the control, I believe, and this is what we did in UNCIA to start with, to say we first engaged a design firm, the top design firm we could get at that point in time, to think through the entire thing from the outside in, of course. And then that's the starting point. We didn't do a database design to start with, right? Which is a standard way of doing stuff. right? So I think that is a fundamental shift. So in the end result, it's about giving the control to the business side of the banker. Sorry about CIOs and CTOs. So where the CIOs and CTOs very often play the role of this enablement with the fintech. They need the CIOs to the key element of making this whole thing work between the business side and the fintechs. And when that starts to happen, sometimes banks start looking like a fintech very often, and and the two start the borders get very blurred. So that's how we see this thing going. So it's a very collaborative, very engaged, very engaging and engaged process where there is continuous exchange of thoughts, ideas, and then you're evolving all the time. So it's a two-way process completely, and that's what I see as a big difference. Yeah.
So interesting, two-way process driven by change and enabling the banks to bring the change. So that's how fintechs can help. I'll go to the second round of discussion and very differently. So it'll be just, we've seen systems, we've seen corporates being serviced by banks for last 2 decades. Now, if you have to reimagine and say, what's one must-have from your perspective, which bank should do while reimagining the transaction bank? So I'll start this time with Hari, you, because Sajeev seems to know all the answers. So just take one key thing which banks should do while reimagining the transaction banking.
Yeah, if you were to one is a tough call, but I would say that the most precious asset you have in your organization is your organizational learning. And today, and the challenge always has been, how do you quote unquote codify? Today, that's become a lot more workable, doable, and the cost of doing that is dramatically coming down day by day. What I'm talking about is, everybody's talking about AI, but when everybody is using AI, how do you differentiate? There's a lot of learning that is happening within your organization every day based on the decisions you make, the discussions you have, whether it's a video call, whether it's a physical meeting, all of that content that you're generating within the enterprise. If all that goes into a repository, vector database, fancy terms and technology, but fundamentally, if you build a SLM or a TLM, a small language model or a tiny language model that sits within your enterprise, that is the core of the AI. And when you start to build that, what you're actually doing is, you're bringing in the initial stage, you create a repository of anything and everything digital you have created that you have. And then you put in a mechanism to capture those elements of the interaction, either with yourselves within the bank or with the outside world as much as possible, quote unquote, which is curated, validated, which can be digitized and maintained. And how do you put in a culture, a people culture and a practice culture that ensures the entire work of the bank within happens on this digital platform, so to say. Whether you speak, whether you write, whether you, not think yet, but it all kind of sits there, and that learning creates your most valuable asset in a digital platform, which is AI-driven, AI-determined, and tomorrow gives you the basis for, in a superior manner, competing with that open API, completely AI-driven world everybody is talking about whenever that comes.
Again, interesting. Customize LLM from customer perspective with all learnings incorporated. Yep. Vinod, over to you.
So I think my view would be that if something I had to change or leave behind, I would have reimagined this not a world of product, which bank used to build and say, this is the product, and there'll be people who come in, they'll walk into the branches, you give me this credit assessment, and based on that, I'll just have 3 things to offer you, right? So that is something which I would like to definitely change, and what we've been talking about, customer centricity and all of that, I think transaction banking goes beyond, and I think Vlad also touched on some of those areas. The operational environment of the customer, the intimacy at a level of understanding what their business is, what they do. See, people were just looking at, and that's where fintech has done really well, giving them ERP solutions, and a lot of our banks have started doing here as well. We can do bookkeeping for you. We understand your operations. You focus on doing what you do better. We keep track of your money. We collect payment on your behalf. We make payments. We look at your liquidity needs. We make your money work for you, right? I mean, that's the view now. It's what fintech has brought in, and then banks were forced to look into it. So if I was given a choice, I would have definitely looked at, if you want to help and do a business, doing business with businesses, so first understand businesses. What do they do, and how do we help them in terms of their life cycle of what they do? I think that's one thing I would have definitely tried to change.
So customer intimacy and taking learnings and knowing the domains to design for them appropriate solution. Very interesting. Vlad?
Yeah, I think I would still go to the very, very basics. We, especially on the international transaction space, relying very much still on SWIFT and doing transaction in the batches. I would really think about moving it all to instant, making sure that I can give this benefit to the customers. I can really look back on something, it was like 8 or 7 years back, when we were doing transformation with the private equity firm back in the Baltics. It was still before the instant payment came. The best thing we did was connecting 3 countries together and providing instant payment. At that time, we were still quite minor player across 3 markets. It actually empowered us a lot across the big banks, actually leading banks. This one small thing helped us moving into instant. It brought a new standard, but for certain corporates, we established this standard. So my big belief is that if we can do it on a global scale, if we can do it via blockchain, if we can connect these multiple solutions together and give this power to the customers in a market like UAE, we would enable the growth for the customers, and that's for me is very crucial, because all the rest I believe we will fix. We will fix product, we will fix data and AI, we will know how to do the omni-channel customer centricity, but the basics need to be fixed.
So delivering instant, and again in corporate context, is like wow, because most of the corporate transactions are quite complex, and that's a very interesting reimagination. Moving, Nitin, your pick.
I don't know what's left now, but I would say we should look at reimagining the end-to-end journey. From customer perspective, if you ask me one change, less paper or no paper. That's the biggest burden that we put our customers under. But I also feel, and I've been trying for all these years, not succeeded, we have to enable our employees to a point we can provide better service to them as well. Today we have such fragmented flows and technology that we need to service a request, we need to go to at least 2 or more places, right? That, if I have to reimagine, I would like to give our employees the same experience we like to give to our customers as well.
So frictionless journey, interesting. Sajeev, finally coming to you. You heard of all of us, but I'm sure you will have a better ideas.
No. I fully agree with what Nitin mentioned. I think you need to re-engineer your complete journey in the beginning, involve your customers in the beginning, not at the middle or end. That is key. Also, the selection of people into the transformation journey should not be based on only their knowledge. Is this person ready for a new generation platform implementation is a key question we need to ask before selection of people into the system. Knowledge is important. Knowledge can sometimes stop you moving forward. That's a key thing. We all need to take it in the right way and implement it in the right way. That makes a huge difference. Certain experiments, the management should be ready to do it. Whether that makes sense or not, we talked in the first panel also here. Try to fail fast if it cannot be. But do it. So I think these are the key things which
So execution focus, reimagine and fail fast. Very interesting. I'll open up now to the audience for any questions for the panelists. If you can just give some mic there.
See, one of the things when we tried to do this transformation on the corporate side was that the pricing strategies were not changed, right? So what are your views about passing on some of the benefits of what you will achieve through the straight-through processing to the customers? Because if they can see that benefit, they'll be on board. Otherwise, if it's the same price, there'll always be that inertia to change. To say, why should I go into your technology when I'm not seeing any benefit, right? Your thoughts?
So Vlad, I think you want to take this? Pricing.
I will take this. I will give you one example from like 12, 13 years back. At that time, GE Capital was still a significant institution. Before we made the decision to exit financial services, we actually had a very strong banking arm with the transactional banking and trade finance. In the US, we were going head-to-head to the Wells Fargo. We were pricing all the time higher than Wells Fargo. We were having market share by way higher than Wells Fargo. Our differentiator at that time was data and insights. We were giving to the customer the platform which would empower business owners, CFOs, and the managers to make a proper decision on the trade and financial transactions. Pricing at that time didn't really make any difference. These customers were not able to be taken by the Wells Fargo. Wells Fargo ended up buying this business and integrating at the moment we went into the disposition. So my simple thinking here is like, it's a customer proposition which you put. If you put the right proposition, customers would pay. Same way as we all pay for iPhones once they get out because we want to feel this new feature and new insights.
Very interesting. Value.
Can I add
Value
to that? Can I add?
Go ahead.
So we are, I think, already moving from risk-based pricing to service-based pricing. And we spoke about insights, where definitely some banks are selling advisory through transaction banking as well. So it's not only just about processing now or giving basic services. You start looking at how you give value-added service and price for that. Now, how do you price it and all? It obviously depends on the bank, but that value-added services is going to become the right pricing, future.
Thank you, Nitin. I think there's one more question there, if you can give the mic.
Assalamu alaikum. My name is Mustamir from Shah Islamic Bank. Almost 8 years back, somewhere 2015-16, I had a chance to, same kind of conference. So there was a CIO of a multinational bank. He was mentioning that, there'll be, in future, in the banks only 3 people will be working. One is the IT, second is the business lead, and third is the security guard. So now we can argue on why he said security guard, but keeping in mind today's, at that time, the people were looking at his face and saying, why he's saying this. There was no concept of AI at that time. Probably was there, but not as open as now it is. So I want to ask all panelists of this session, or the previous session, if somebody can answer. Do you think it's possible in the near future that only 3 people will be working in a bank?
Can you paraphrase your question? Can you paraphrase your question because we didn't get it?
So question is, what the CIO of the multinational bank was mentioning it. In future, I could see only 3 people working in the bank, or 3 departments. IT, business lead, third is the security guard. So in living in this AI culture, do you think, or can you foresee in the future that it will be only 3 people in the bank?
Can I give a cute answer?
Sure.
I think you can separate the security guard. That's it.
No, as I mentioned it that,
Because we're going to go digital, right? So take the security guard out.
So we can say...
Replace it with the information security people.
That's what...
So,
Vinod can add, yeah.
So I think this is too oversimplification of what bankers do and what they are paid for. So I think it's not just technology which does the magic. Yes, it is the glue which stitches everything together. But there's a lot of things that goes along, and I'm part of a transformation on a business side, and I'm leading that along with senior leadership as a leader on that. We are driving multiple pillars when we have to go to market for reimagined capabilities or product lines that we are looking at. We have to look at definitely from the product construct, which requires a lot of research in the market, benchmarking that we need to do. We need to have people who are visionary to take the leadership from a distribution standpoint, be it even digital. There's a lot that has to go into in terms of the marketing, integrated marketing strategy. So we put a full integrated marketing plan. There's marketing leaders who drive that, of how we distribute the product. Then there's this partnership, which is again very pivotal in terms of creating the products and distributing products. So there are two parts to this. One is co-creation of a product with a partner. The other is the distribution aspect of your products getting sold or your customer getting serviced, right? So that's another thing, right? So, and then this is the GTM pillar of go-to-market, right? How do we go to market what we are designing as a product? Compliance, risk, very, very critical functions. Looking at regulations, ensuring everything is covered, because we were discussing in the earlier panel that the products and services that we deliver, right? There is that element of risk, which is not just at a bank or an institution, but a country level and global risk, which needs to be assessed, right? In terms of what businesses you do. And being a bank, you're part of a systemic risk. You can pose a systemic risk to the country and to a larger, so it's a serious business being a banker. So I would say yes, a lot of people come together, and I don't think it can be simplified with just IT and one business guy doing the bank. I am part of a certain transformation in Nordics, where I have a lot of banks who are running very lean team of people. The bank do not have more than 40 to 50 people in the bank. And these banks are running on shared platforms, which are technology platform provided by providers like Nets. These are big players. But again, all these critical functions that I spoke about exist everywhere. They are not going to disappear.
If I can comment on this minute. There is when we do this longer, thinking about what we do next, I put up one diagram on the board. I said, technology, license plus capital is all lending needs to be. Nothing more is needed, no matter what you're saying. The point really is that I think that if you look at a technology utopia, it's an absolute ideal situation. Is that possibility there? There are a number of things, of course. There's a man in the middle today that is making the big difference in how AI becomes practically workable in the field. So when there is, which is why I spoke a little bit about SLMs and tiny TLMs, where if each organization's knowledge is codified in a language model, whatever the size of the language model is, based on the curated, validated data coming from within the enterprise, entirely within the enterprise. And there is a mechanism by which the outside world data, in the interaction that happens in the outside, from the outside, is put through a sieve, where you can take out the chatter and pull in only that is valid for you. That's another piece of question that needs to be answered. And the third, the regulatory part. If regulatory validation is happening in real time in every transaction, and the transaction is happening, which is possible by definition, because there are a set of rules and there's an engine that needs to validate that when the transaction is happening. If you put all this together, ultimately you create a global digital money marketplace where there are only open APIs. And whether he is a supplier, whether it's a buyer, whether it's an individual, whether it's a SME, whether it's all these are individual entities represented over there in whatever form, the totality of the picture, whether you're within the bank, global bank wants to see the cash position across 15 jurisdictions on one single screen. Today, you don't have to see it anymore. If there is a gap somewhere and the excess somewhere, it'll move it. Because it will know that it has to be moved, as long as the rules are learned. So it's a matter of, does technology provide a possibility? Today the answer is becoming bigger and more of a yes. When it will happen, the path that in the humans and regulators and the entire ecosystem will go through as an industry to reach there is a very, very open question. as nobody believed that cars will drive by themselves. Soon, in California, if you go today, there are parts where you can sit in a self-driven car, right? And in other parts as well. So this is the evolution and the path in which technology goes, and these questions get asked. Utopia gets picturized, and it takes its course. So,
Thank you, Hari. I'm getting looks already. We are out of the time, so I'll close the panel. Thank you so much, panelists, for an amazing insights. And on behalf of audience, a big thank you to all of you.